Hello everyone, and welcome to another Uncomplication, another crypto-flavored Uncomplication for you. I know a lot of you are abuzz as we watch Bitcoin plummet in price. I have some good insights, I think, to share today. I'm going to try and make this quick because I have a consulting session starting, which I'm still offering Uncomplication sessions to anyone who's interested. You can book time with me on this Gumroad page. Link is in the description. Let's talk about your startup. Let's talk about your crypto. Let's talk about your deep existential fears. I've really enjoyed all of the different people I've talked to now. Helping you just kind of have a sounding board, digging into some complexity so we can find that profound simplicity. So check it out. I look forward to talking to more of you. But let's dig into Bitcoin. Let's talk about the market. And there's a couple things that I wanted to share today. So the first is, as always, when in doubt, zoom out. Let's take a look at this big picture. This is my favorite macro level view of Bitcoin on the BLX, the Brave New Coin Liquid Index for Bitcoin. These bars here, these kind of greenish bars, represent the halvings. And some of you have called out that these dates are wrong. That's because every time I resize this chart, TradingView likes to reposition those bars. So as much as I've reset them, these are approximate. They might be off by a few days or even a week. But essentially, in Bitcoin, there is this event that happens every 4 or so years where the reward that is paid out to miners is cut in half. And it just so happens that every time that has happened so far, it has kicked off a market cycle. And if we look at these market cycles in more detail, I like this image here. Even though it doesn't have the most recent cycle, we can see that each time we've had a bull market, followed by a bear market, followed by accumulation, and then expansion, reaccumulation, bull market, bear market, accumulation, expansion, reaccumulation. And so my belief, my crypto thesis is that Bitcoin is highly cyclical. I think that's one of the things that's really enticing about it to institutional investment types, is that there is a game here that is being played. And you can see that the actual intensity of these parabolic run-ups during the bull market, they're getting squished, attenuated, smaller each time around. And that was true of this most recent run-up. We can look at this with the logarithmic regression, which is kind of a cool way to look at it. There's better adjusted ways to look at that regression too, but it's flattening out. Will we see $100,000 Bitcoin? I have no doubt. Will we see, $1 million Bitcoin? I'm less confident. But the thesis again that I'm operating under is that we are going to continue to see these phases of intense markup. And when you're in that type of a phase, it is a phase where people are selling you what they've already bought, and it's marketing. Everything in crypto is marketing. Anything that you hear about a certain project, about Bitcoin, we're going to talk a little bit about Michael Saylor and Plan B here in a moment, but you just have to remember that everything you hear in crypto is marketing. It's either trying to get you to buy something, or in the reverse sense, it's trying to get you to sell something. And that plays into these cycles as well. When we're in a bull market, the bullhorns are on, people are in the streets, your grandma's calling you up asking about Bitcoin, and it seems like there's just nothing but a bright future ahead. That is a mark-up phase where the price is being marked up, and those larger holders that accumulated back in these red zones are selling. And then the bear market is what we've been experiencing. It's this struggle, sideways movement, really going nowhere, just a grind down and down and down to get back into this place and time where nobody wants the stuff. Nobody wants Bitcoin. And as I was looking at just my news feed earlier today from even, CoinDesk and all of these places that are normally really positive on crypto, the news about it is just dismal. More regulations, crackdown on monetary policy, different crypto companies that are going out of business. It's just, the articles right now on even if we went to let's go to just Yahoo Finance, Bitcoin, everything is going to be doom and gloom. $14,000 bottom sinks to a fresh 18th month low as crypto meltdown deepens. billion in liquidations on a Black Monday. Crypto is down but not out. Crypto debacle at Celsius rattles market already shaken by Terra. So this gets back to what we've talked a lot about on this channel, is just remember that this is largely an emotional game. The only way that large interests are able to sell things at huge markups is because they're able to create that extreme greed. And the only way that they're able to accumulate over long time periods without everybody, rushing in to buy as well, is with these periods of extreme fear. And this has always happened over time. We're back in this period of extreme fear, and it's likely to continue because as we look at our big zoomed out view, we've got a lot more time to go before we get to this, 2024-ish moment where we will likely kick off another cycle. That's not to say that it has to happen this way. This is just looking at what has happened. And again, not thinking about the what, not thinking about price, technical support, resistance, any of that kind of stuff. We're purely looking at the why. Why is this a profitable game for there to be these long phases of accumulation prior to these huge markup phases and selling? And as we saw really clearly, a sophisticated market taking money from retail investors, these accumulations and accumulations that come before the distributions, where people think the price is going higher, it's going higher, it's going higher, and people are willing to buy something for $70,000 that was worth only $3,000 previously, before the price turns around. And what I'm really just kind of rambling about here is this is what we've been talking about. These are the Wyckoff cycles. This is psychological. It's the why behind the market. And the psychology of what drives something up is the reverse of what keeps something low and allows people to, large interest to buy and accumulate over large periods of time, so that whole process can be rinsed and repeated. So if I'm looking at this chart here and I want to make a prediction, let's talk about long-term prediction first, and then let's talk about short-term predictions, because there's kind of cool stuff that we can do there too. So if I just zoom out here and I look at these market cycles and say, what do I think is going to happen next? I think that we're still in a period of bear market. I don't even think we've really got to the accumulation yet. I think that we're going to see a lot more scaring, a lot more people fleeing this space and all the doom and gloom news. I'm expecting that we're going to see, we've never really gone below a previous market cycle peak in the bear market. But the prices were also a lot smaller. I was looking at this, the distance between the, the market cycle top in 2013 was at about $1,300. And then the bear market floor was at about $3,200 loosely. That's about 158% above that previous market cycle peak in that bear market floor of 2018. And this time around, we've almost kissed it. So we were at $20,000-ish earlier today, which is right about that market cycle top. So I don't know if we're going to continue this trend of staying above the previous market cycle peak. I'm going to speculate that we won't. Again, with the why, I don't think it's as important to maintain these levels as it is important to drag this price down here and get into a real phase of accumulation. There will still be constant money making happening here with these daily moves. And we're going to talk about how the market moves in a shorter time frame if you're sticking around and wanting to play this bear market game. But I see no reason why we wouldn't be getting back into an accumulation zone. And then typically what happens is that when we hit this moment, this halving, there is momentum that is just built in, and then narrative change. And now who knows what's going to be going on in the world in 2025. It could be war, it could be famine, it could be the collapse of the dollar, the blah, blah, blah. Who knows what's going to happen here? But I'm pretty confident it's going to drive a big narrative that crypto is where you want to be. And the way that I look at this is each of these market cycles, if we just do Fibonacci extensions and we go from high to low, this market cycle, we got pretty high in the extensions, right out of that extension zone. The next time around, high to low. We really put in a very nice and tight extension after that, the run up and then the crash back down. We were in these high extensions throughout a lot of the bull run. When people thought that it was going to break out and go to 220, we had already kind of paid off that accumulation, that potential that the market had. And so if I just think about this again and I say, I think that we're going to get down to some of these lines that I just drew, I think it will go below $20,000. I have it here going all the way down to $8,000. That might be a little bit aggressive. Let's just say we get down into like, I don't know, 18,000. Now I'm really being forced to make predictions. I don't really know. I think it'll be in the teens. I'm just going to say 17 just for the sake of, drawing here. So all of the stuff that I just drew, I'm actually going to leave this on here for a while because I want to see, if this if this plays out over a long enough time. So I think we are going to kind of crawl down here. We're going to get into this low place, then we're going to get to the halving, have an expansion, a reaccumulation. And then I think that we will see, more kind of accumulations, distributions, getting us back up into, and if you look at this is $245,000 Bitcoin. Like that's a big payday if you stick around, if you hang on to your, bags. I have no doubt that it's going to be the same psychology. We're going to, continue this sort of distribution and accumulation pattern. So I don't know where the market will be at. Fool me once, fool me twice, fool me 3 times. You fool me once, you can't fool me again. We'll see, the wizeness of the market, but I would anticipate, if I'm just drawing lines on a chart, that we would see, above 100,000, above $200,000 Bitcoin in the next market cycle. But it requires the building of these causes to kind of load that spring. Okay, how about in the short term? Let's talk really quickly about that because this is something that I do think is really interesting lately. Let's pop over here to another chart. Let's look at, let's try and find one that's a little less messy. I don't know if that's possible. So here's my other chart that I was drawing predictions on previously. And I was pretty happy about this one. I talked about that in the last video and I kind of ended there. But okay, let's go to the daily view. And I want to bring up the 6th of June. So here's June 6th, right here, right before this big dive. All these purple candles here, that's my, on my chart, purple is red, right? So here's the 6th, and then this big dive. I recorded a video that I didn't post. It's something I do a lot. I'll try and be better about posting more of these. Tell me in the comments if you think I should post more. That just makes me feel loved. But I took a screenshot of this image here. Let's see. Where is preview? Okay, cool. So this is from Kingfisher, thekingfisher.io. This is a site that Cello in the Crypto Garden has turned me on to. He does videos every week for the Crypto Garden YouTube channel. He's talking in the Discord. If you want to really get buddy-buddy with some smart people in crypto, the Crypto Garden, we're still up and running. So the Kingfisher, this is showing us densities of liquidations in crypto exchanges. And so this is from the 6th, and I recorded a video where I was looking at this and saying, okay, well, we know that the market is really just a game of taking people's money, wiping people out. Here's where the liquidations are. And if you look, there's a few that are high, getting back up into the 45,000. There's some pockets of these liquidations where if the market were to run up to $36,000, it would liquidate some of these shorts that are all hanging out up here. But if you look at where the density is, it's lower. $30,000, $27,000, $24,000, $21,000. Here's where the density is. And so in the last video that I recorded that I didn't post, I probably should have. This is what I was saying. My thought is we might kind of come up here and kind of flirt with taking out maybe 36. That's a pretty big move. It's a lot easier to, if you're looking for liquidity, to go lower and $30,000, $27,000, $24,000, $21,000. And sure as shit, that's exactly where we've gotten to. We've gotten all the way down to the $20,000 range. All of this liquidity, all of these long positions that have been open, all of these stop losses, all of the, trading on leverage. This is just that supply of liquidity that allows the market to continue to move. Those market makers, they're always needing to recoup on the positions that they allowed to open so that they have the supply, the liquidity to continue making the market and playing the game. So more and more, this is what I'm coming to check out, just to see where is the liquidity, where is price going to go next to kind of wipe people out and continue playing this game. And a week ago on the 6th, it was all in exactly these ranges that we have now just kind of plummeted through. So I don't see crypto as much as this space where it's purely narrative driven. These are the scarcest assets on earth. Everyone wants some. Or, oh my gosh, the world is imploding. The sky is falling. It's all over. Crypto is done, yada, yada. I see that again as these two sides of either, getting people to buy in at the worst time or to let go of their bags or get liquidated at the worst times to keep this game going. Let's talk just for a second about this religion of Bitcoin. I had a friend that I sat down with and they were asking, is Bitcoin what Michael Saylor says it is? I heard this podcast with Michael Saylor. He's just sure this is the most valuable asset on planet Earth and it's, the future is Bitcoin. I have a lot more to say about this. I'll probably record a second video, but for now, I'll just say, I was sort of drinking the Kool-Aid earlier. And now when I read stuff like this, here's a page of Michael Saylor quotes, and Michael Saylor goes around saying that Bitcoin is a swarm of cyber hornets serving the goddess of wisdom, feeding on the fire of truth, exponentially growing ever smarter, faster, and stronger behind a wall of encrypted energy. When I hear this kind of shit, I'm looking for the exits. If this is the high priest on the altar of crypto, I feel like this is such a disconnected reality from the truth of a market that's here to make money, that is being invaded by smart institutions who know what they're doing. I think this is exactly the kind of stuff that gets people to drink the Kool-Aid, make foolish mistakes, and then get really scared when that cyber honey is back down around $20,000 and it's lost 60, 80% of its value since you first heard the sermon. So I'm going to talk a bit more about this because it is a point of frustration for me that people like Plan B, these experts in the space, clearly have no fucking idea how a market works, why it's moving, what it's doing. They'll go on social media, again, marketing for crypto, marketing for Michael Saylor. In Michael Saylor's reality, the only way this comes true if he's out there evangelizing for it. The two are not separate. Bitcoin is not cyber energy unless there's people like Michael Saylor out there convincing the world that it is, because the value of anything is only and always what you can get someone else to pay you for it. So I'll leave it at that. Remember, if you want to book time with me, do an Uncomplication session around whatever it is you're working on, you can find that link in the description. I'm going to get to my engagement and I will talk to you soon. Cheers.